quarter in this vicinity. If you can get it down there, I think it's the performer that I called it as the best performer of 2022. I'm still in that. It's hammering on that kind of trend line there. If you connect the lows from January and the lows from I believe it's late February, and it's barely holding on. And what's interesting is that we always notice that you're always at a pivotal level going into a pivotal event, right? So you have the Federal Reserve tomorrow, and it's hanging on that trend line right there. And so you're either going to get a slightly less hawkish statement or just the hawkish that we're expecting. And it probably is going to either tip Bitcoin over the edge, or maybe it can save it for a little bit of time. But I think inevitably it's going to go lower. I mean, the channel is a bearish flag pattern. It is what it is. I've learned not to question the charts in my career, because every time I question it, I'm wrong and I lose money. It's kind of interesting here, right? I'm going to get a couple of these trend lines out of here. So yeah, I mean, we did hit support yesterday, and we saw a nice reversal in the S&P 500, and a lot of people were kind of surprised, like, oh, why did we have this? And I think the bottom line is you had this pretty steep decline over the last 2 weeks, and you have some shorts out there that are saying, okay, listen, ultimately, we think the market might go lower, but I don't want to have all my shorts going into a Fed decision. That's a lot of risk on the table. So it was a little bit of a de-risking, saying, okay, let me cover some of my shorts and ahead of the Federal Reserve. And I think that's why you got this nice little bounce yesterday. I also think there's a hope that we finally tagged 3% on the 10-year. And I think there's a general thinking, and I'm actually in this camp in the near term, that we should get a pullback on yields. So the hope is maybe that's telling us the Fed will be slightly less hawkish. So on the 10-year here, you aren't quite to this double top here from 2018, but you're pretty darn close. But I think ultimately, usually when you see a breakout, and you can see this trend line goes all the way back to 1987, which is just kind of interesting, since that was the last time we had that big crash, the 87 crash. But the trend line itself, usually when you break out above it, there's at some point, whether we go up here or whether it's right here, you see kind of a retrace and test of that line. So I could see, maybe yields going a slight bit higher to 3.15 or something, but ultimately a pullback to 2.5, 2.55, somewhere in that vicinity could be in store. And I think that would be short-term positive for technology stocks. The only negative is the pullback because the Fed is slightly less hawkish than the market anticipates, or is it because the economy is weakening so quickly that we're going into a recession? And in which case, longer term, that's really bad for stocks, right? It means lower profits and all that fun stuff. I would dare say that I always am a believer that even though the month, I mean, we ended the month, but I'm always a believer that the Federal Reserve sees these numbers ahead of time, or at least the rough numbers, maybe not the exact final numbers. So basically, when we hear from the Fed tomorrow, if they're slightly less hawkish, that might also mean that it's going to be a weaker number on Friday than anticipated. So I think gold here, this is doing exactly what it should do. So let me just kind of clean up my charts. So you had two trend lines here, and this is the weekly, so we're going back to 2020 on this chart. But you can see that both of them basically were right in this area around 1850, and we broke out. So this is an actual legitimate breakout on the chart that we had early in kind of February and March, and it coincided with the invasion of Ukraine. But following, just like we were looking on the yield chart, this is almost like a fast forward on the yield chart, where what you expect is you kind of expect a retrace into this level, and then it gets its next legs under it and starts to take off. So I'm in the camp that, there might be a little bit more downside, but it's very minimal at this point, maybe to 1825, 1850 area. And then I think the next leg up on gold begins. I actually did buy silver via SLV over the last few days. And that's basically just looking at, let me go to the daily chart here.
I know.
But this is an incredible literally no green candles on the daily chart of silver for the last, 2.5 weeks here, which is incredible to see. And look at all the support you're coming into down here. So, I'm not necessarily marrying this position for the long term, but on a technical basis, I got to believe there's going to be some sort of technical bounce down here. So the market does have a way of doing that, 100% right. And what I do is I compensate for that fact. And I've learned that the hard way in my early career more often than I'd like to admit.
Using less leverage.
Yes, correct. So for instance, I'm only in about 2% of my portfolio in silver right now. I'm willing to go up to probably 6 to 8%, right? So I'm basically dipping the proverbial toe in the water, knowing that if
scale.
they try to shake and we go down here, I can add a little bit and, right in this vicinity here, just in case it is a shakeout. I mean, you don't see moves in the currency market like this very often, and I'm sure you can attest to that, Dale. Yeah, it's remarkable. I don't think it's going to last personally. If you go to the DXY itself, you should be, at least according to this chart, you should be right around a pullback area. So you can see going back to December 2016, we were right at this high. And again, what I look for is not just highs, but how does it get there, right? So if it meanders slowly and it pulls back and it kind of a winding, gentle river, well, then the pullback is usually very gentle. This happens to be one of the most dramatic moves up in the dollar we have seen in a long time. So I would actually expect a pretty dramatic pullback, maybe in this range right down here to the 99.50 area on the DXY. So I do think that we are due for some sort of pretty sharp pullback, whether that's some sort of resolution at some point in between Russia and Ukraine, or if there's some other event. Slowly starting to be this kind of movement away from the dollar by China. China's now buying Russian oil in yuan. We've heard that Saudi Arabia was now accepting oil in yuan as well. So I talked about this as much as 6 to 12 months ago, how when China introduced the digital yuan, I right away said, okay, guys, this is them going on the path of wanting to have the reserve currency of the world be the digital yuan. And honestly, I think we're seeing more and more of these little things. So again, this doesn't really speak to what's currently going on with the dollar, because the dollar is reacting to fear, it's reacting to uncertainty, and it's still that store of safety for the global markets. But I do think over the next 5-10 years, you will see a weakening consecutive, just constant weakening of the dollar as more people shift away, or more countries, I should say. Then this is the buy that I think is going to be the key. And again, I think 1850 to 18.25 in this vicinity, if you can get it down there, I think it's the performer I called it as the best performer of 2022. I'm still in that camp, and you're getting a second chance to pick it up if you didn't when it gets down there. And the concept here for me, the forecasting is that basically the market's beginning to think the Fed is going to get inflation under control. I think by year end, we clearly see that even with higher rates, inflation maybe comes down to 5 or 6%. And then we're going to see gold continue up as inflation sticks around 5 or 6% for the next many, many years, and we actually see a recession come into play. So I think gold is the safety play here. It's been an underperformer for so long. I think it finally has that 1970s type move to the upside, and I think that is my highest conviction over the next 6-12 months. So I actually do think silver starts to participate. Obviously, the industrial side of silver is what's keeping it under wraps a little bit, because people are starting to fear a global recession. But I actually think that the longer you see these inflation numbers stick around, the more people are going to say, okay, yeah, gold is the pure play, but all these commodities are going to see higher moves either way. So I do think that maybe it sticks around this area. I do think gold, again, is the pure play of the kind of the no-brainer one, but silver I still think actually does relatively well over the next 12 plus months.